So question 1, the further actions with regards to the going concern assessment made by management, and then their refusal to give us other information. So first, extend or request for an extension of the assessment, obtain a management rep letter, try and get evidence without using the assessment. So for an example, obtaining information from the business rescue practitioner. If they're unwilling to extend and we are then unable to obtain sufficient evidence, qualified or disclaimer. Guys, straight out of ISA 570. Refusal to provide information. There's a material uncertainty and we need the information to be able to prove that the going concern basis is still correct, and they just need to include the material uncertainty. So we need to request that they remove the limitation. And if they refuse, we need to try and get the evidence without using what they have not given us. But if we can't, qualified and disclaimer, and now this comes from ISA 705. Okay, include in your basis, material uncertainty. Guys, I have highlighted this in green because it often is included as a mark, and so I've included it here, but I don't agree with it because you should only be including material uncertainty related to the going concern paragraph in the audit reports if they have disclosed the material uncertainty. And in this case, they haven't. So I've put it there because you often get a mark for it, but I don't agree with it there. Okay. And then key audit matters. And because they are refusing, there could be a reportable irregularity. Calculation for materiality, guys, straightforward. Choose your figures, current, benchmark. They're all fairly stable. There are no income items, so I've got to go with the assets. Take my assets, apply the percentages to get a range, conclude on risks, and then set your final materiality. And then our considerations and response. Guys, normally a question like this will guide you by saying consider audit reports and APA, but I just wanted to exclude it to make sure that if it isn't included, you do go there. Okay, so often you might get a little bit more guidance. In terms of your PPE, you prove that there's an impairment that they haven't gone and recorded. We've proved it's material. It's factual. It's not pervasive. We request the adjustments, and if they don't, there's a qualified opinion. The non-current liability. We prove there's a post-reporting date event, but we prove that it is non-adjusting, but they have adjusted. So we've got a material misstatement, both quantitatively and qualitatively, which is factual. So I will request the adjustment. Okay, included in that is the disclosure for them to record the material uncertainty. Irrespective of whether they make the adjustment or not, we need to consider a reportable irregularity. Prove the RI. And then report it to Urban and management. If they don't make the adjustment that we've asked them to make, qualified opinion for this on its own. Unless you prove pervasive because of management's intention, then you would go adverse here. In aggregate, I prove the financials are pervasively misstated. When I aggregate all the material misstatements, I'll then give an adverse opinion, include other legal and regulatory requirements paragraph, and key audit matters paragraph. Okay, nice question that tests all the sections of this part of the syllabus. Okay, guys, good luck with tests coming up.